Hey, this is Jeremy North with your educational and economic update for March of 2022. In this month's video, I will discuss major headlines that influenced markets in February and economic and market events that we are looking at to influence March returns. Please stay tuned at the end of the video for the always exciting required disclosure statement. Well, continuing with the downturn we saw in January, the S&P 500 finished February down 3%. The NASDAQ was down 4.9%. and the Dow was negative 3.5. Bonds were also down, with the Ag Bond Index losing a little over 1% in February, leaving it negative over 3% for the year so far. Commodities were mostly positive, such as oil prices, which have jumped to their highest level since 2011 on Wednesday. The stock and bond market sell-off was caused by Russia's troop buildup in the invasion of Ukraine, coupled with the Federal Reserve's plan to begin raising interest rates this month in their quest to fight inflation. U.S. investors have had trouble assessing the implications of Russia's invasion of Ukraine. Among other economic sanctions, the U.S. had banned transactions with the Russian central bank and worked with other governments around the globe in limiting Russia's use of the SWIFT payment system. Sanctions have also been placed on Russia and their financial institutions. The tech and communications services sector were among the weakest in February. Commodities were strong, which is often the case during stock market turmoil. The S&P GSCI index, which is a global commodities index, recorded a very strong rise following the Russian invasion of Ukraine. Agriculture was the best performing component of the index. It also included good gains for metals, including gold and silver. As expected from the positive performance of energy stocks, the energy component of the commodities index also had a very good gain in February, as crude oil prices went up over $100 per barrel. Beyond these events, the U.S. economic picture remained robust. The U.S. growth continues to look strong, while inflation continues to be at levels unseen since the 1980s. Industrial activity measured by the Purchasing Managers Index, or PMI, rose to 56 this month from 51.1 in January. U.S. inflation, measured by the CPI index, rose to 7.5% for year-on-year in January, which is the fastest pace since 1982. Rising prices are a key contributor to a weaker consumer confidence rating. A market downtrend was technically broken to the upside just before Russia invaded Ukraine, but since the invasion, the market turned back down, showing that further weakness can be expected. However, we want to note that the past 6+ wars have actually been positive for the markets after the initial shock to the downside. With the strength of our economy, we would expect to see a similar outcome from this armed conflict. As noted last month, COVID Omicron cases continue to come down rapidly and are now at a level 90% below the peak from January. Many states, municipalities, schools, and businesses have relaxed mask mandates. Additionally, job creation has jumped again as the economy added 678,000 jobs, and the unemployment rate fell again to 3.8% from 4% in January. Wages also continued up about 5.1% on an annualized basis and are expected to continue to grow as we are in a very hot labor market. Many of the wages increased starting at the lower paid sectors such as restaurant, hotels, and warehouse employees, but appear to be spreading throughout higher income brackets as well. The Bureau of Labor Statistics, BLS, also showed an increase in productivity of 6.6% in the fourth quarter of 2021, which also was 4.1% of the productivity level of 2019. The hope is that wage inflation will catch up to the higher prices we are seeing for gas, food, and rent. Our hope is also that the Ukraine situation ends quickly and without any more bloodshed. But in the meantime, we are diligently assessing the economic and political implications for your portfolio. Should you have any concerns or questions, or you just like to discuss your personal portfolio or situation, please give us a call at 636 896-4052, or send us an email to info@360ira.com, or send me an email to jnorth@360ira.com. With all that being said, here's the disclosure I'm required to read. While we believe the information in this report is reliable, we cannot guarantee its accuracy. Opinions expressed are subject to change without notice and are not intended as investment advice or solicitation for the purchase or sale of any security. Please consult your financial professional before making any investment decision. Investing involves risk, including potential loss of principal. No investment strategy can guarantee a profit or protect against loss in periods of declining markets. The indices mentioned are unmanaged and cannot be invested into directly. Past performance does not guarantee future results. Thanks again. Jeremy North signing out for the month of March. I hope you all have a great start to your spring, and I look forward to seeing you all and seeing some warmer weather. Take care. All the best. Bye.